I'm happy to introduce both Jim Van Dyke of Futurion as well as Mike Diamond from Mitek. So, Mike, why don't you kick us off and lead us into today's webinar on the 2018 mobile deposit benchmark.
Great, Young. Thanks a lot. And everybody, welcome to this webinar. We're really excited to bring you this research. It's the third annual mobile deposit benchmark report and done by Futurion, which is an organization run by Jim Van Dyke, and he'll introduce himself here in a second. And then also with research done by Comrade Agency that Young is part of. The reason why we do this is because we have at Mitek, we have passion around learning. My name is Mike Diamond. I'm responsible for our payments business at Mitek, which effectively ties into our mobile deposit product that's used by over 6,000 banks and is in many ways the hero product of a digital banking application. So we've been sponsoring this research. The research is done by others and presented by others, as you will hear. But we've been sponsoring this research for a while so that we all grow and learn together. If you can move to the next slide, I want to just talk about one thing here before I pass the baton on to Jim. Thank you. So when we talk to banks, we often ask them what percentage of check deposits coming through the mobile channel, and this is particularly on the retail side. Some banks, as in the case of Bank of America here, some banks actually publicly announce what their number is. They might do it over the course of an analyst day or in a filing or some other industry event. But the number is very surprisingly low. If you look at that number, and these are a partial sampling of some of the top 30 banks that we're in touch with, and we know what their numbers are. It's about 16.5% on average. And frankly, nobody should be satisfied with that. The mobile channel is a powerful channel. It's never going to be 100%, but banks have got to be able to do two things. Number one, you have to have your number in your head. You have to know what your number is. If anybody on this webinar is with a financial institution and you don't know what that number is, go find out and have other people know what the number is and put it someplace visible. And the second thing is you have to know where you're going. And my expectation is that banks that are firing on all cylinders will be getting to the 30-33% range by the end of 2019 because the adoption should get easier and easier. So you have to know where you are. You have to know where you're going. And I'll talk more about this at later. But this is the idea that we want people to consider as they're growing their digital channel. And with that, let me turn it over to Jim. And Jim, I'm going to let you introduce yourself and kind of get into the meat of the webinar.
Great. Thanks, Mike. I appreciate you setting things up here, and I really appreciate this third year of our 3-year partnership and the work that I get to do with you and with the support of Comrade, whose office I'm sitting in right now. And thanks everybody listening for again your patience as we were in a dual line situation with actually an offshore systems integrator team. So you're part of a real live production process going on. So as Mike said, we will get right into the process. This is a really fun project. Just want to give a quick background on it before getting into the results that you're here for. And also mention that we're going to run this as interactively as we can. Mike Diamond did the introduction. I'll hand things over to him at the end. We will have time for questions at the end, yet we would like to invite everybody that's on this webinar to steer the direction of this so you get out of it what you were hoping to. And what I mean by that is if you have a question or a comment, or you might even see things differently, or see something that you think people aren't paying enough attention to, please don't wait to see if we get to it. Type it in the dialog box now, and we'll see it on the fly. We'll do our best, thank you, to introduce it, or just the flow of the presentation as we go on. So again, please don't wait. We'd love to meet your needs. That's why we're doing this. So moving on, my quick background, I run now a very small research organization with a lot of contractors, smaller than Javelin Strategy and Research, that seeing a few of the names, I've gotten to know a few of you over the years. Sold Javelin Strategy and Research a few years ago. I'm on do a little bit of board activity on the board of the ID Theft Resource Center and formerly CFPB, and please don't hate me for that. Some of you, if you want government regulation to be better, you'll hopefully appreciate that as a person who believes that citizens should always be involved in government. I got involved there, and sometimes appreciating what they did and sometimes wanting it to be differently. So on the agenda, we'll be talking today about answering the question, does CX drive mobile deposit adoption? And if so, in what way? What can we learn about that? Because after all, I think most people would agree that adoption and ROI are really, they move it hand in hand. And what are the overall findings from this year's study? And you can download the study for free. While I used to love running a bigger research company, one of the things I really enjoy now is thanks to folks like Mitek, who, frankly, if the risk is sounding too blunt, they pay me to provide independent research, but they can't buy my findings. They could do this research themselves, but then a lot of you would be, you wouldn't necessarily know whether or not it was, how much of it was vendor influenced. That's not a reflection on Mitek. That's just kind of a concern people have in general. So Mitek took the step of confidence and investment in their customers, and didn't ask me to say this, by the way, and said, would you do some independent research for us? Because they believe that having us, when I say that's me and the Comrade team in data collection and help putting this report together, that allows you as a participant in this webinar, reader of the report, to have the confidence that you're seeing the pure data and come back with findings on where we think you can get several shortcuts to ROI. So we will talk about this new best of breed standard in mobile deposit, and kind of a hint of something we'll be talking about later. We're literally also inviting all of you to game the system. That is, once you're familiar with how we structured these rankings, we invite you to meet with us separately afterward and find out what our thinking is about how to conduct benchmarks, so that really it's almost like meeting with the referees of, in the off season before getting your team ready for the World Cup or the playoffs or what have you. You're invited to do that. We'll give you some real examples of where people have done that and really gotten what you might call an unfair advantage, but it's actually a very legit advantage. And then we'll talk about the adoption choke point that everybody controls, which is deposit limits and some other related areas. So research methodology. All the data was analyzed and reported by Futurion, me, and working very closely with Comrade and CI&T, their new mothership. And so that means, again, 100% independence in the data. And we did the direct data collection, didn't have any influence. Now the ratings came out, so naturally had a lot of surprises. We, for the last 2 years now, have been accessing live accounts for essentially 20 large retail multi-channel FIs. We often get the question, well, I looked at for example, someone might have said, well, I looked at an American Banker ratings of the top banks, and I see a bank that, for example, is number 15, and they're not in your rating. Why is that? Well, we are looking at roughly the 20 largest, number one, multi-channel banks. So there's some large retail banks that are not multi-channel, and we wanted to focus on multi-channel only because we want to consider the role of branch and CSR employees in building adoption and therefore ROI. It really is part of CX. And also there's, in some more generic rankings, you'll see big business banks or maybe people that have a mortgage footprint or something like that, which didn't factor into what we're looking at. But having said that, if you want to be in the ratings next year, talk to Mitek, and I think they'd be very interested in hearing about that. We did expand or refine the methodology from last year, and if this study continues, I'm sure we'll do it again in the future for all the right reasons. But you want to be careful when comparing a previous year's category to next year's. And can I even complete the thought that I started to say earlier, but this report is, the study is free, which is one of the things I enjoy in my role since selling my old company. So some of the big findings. Mobile deposit, which we sometimes will call MD, and by the way, a couple things about abbreviations. Talk about CX, which stands for customer experience. That's the totality of what it's like to be a customer. UX is the subset of customer experience. It's really about being in the app, or if you're online, in the screen. Right? So what is CX that's not UX? Well, maybe that would be mobile deposit limit, or recommended number of daily paper check retention days, other things like that. It could even be marketing, although we didn't measure that, and even though it's a very significant area, because it's just so it varies so much. So mobile deposit continues to grow quite a bit. You heard some of Mike Diamond's numbers earlier, which I think is a great way, by the way, to compare metrics. Look at some of the numbers they get, and then compare that to these benchmark numbers. Barriers to adoption include deposit limits. It's a very big deal. You'll hear me mention it several times. And frankly, a lot of people are, while they have a great focus on UX, which are some of the main things you can change, they're sometimes overlooking things that go beyond that, especially smaller credit unions and community banks that just get frustrated by being beholden to the core processor or digital banking vendor. Fear of fraud, funds availability, and service fees, mostly attitudes around it, but we'll get into, none of the large banks charge service fees anymore for usage. Sometimes the marketing and sales group has a little bit too much inappropriate control. We'll explain what that means. And FIs have really improved the CX overall. So if you looked at your ratings this year and said, how come we slipped in the rankings and we didn't change anything? That might actually be the problem, because the bar is actually moving up. So we had this hypothesis. I'm quickly going to step back for a minute, 2 years, step back through time, and then we'll get into the detailed findings. We, a couple of years ago, when we sat down with Mitek, and they said, would you do this independent benchmark study? Because we at Mitek, speaking for Mike Diamond and others, have this belief that banks are sometimes holding themselves back. They're creating their own frustration, but they don't realize that they're doing it. We said, well, how about if we actually look to see if there's a correlation in the statistics sense of the word between adoption and CX, and a true statistically derived correlation. So I know I'm going to nerd out for a moment. I promise I won't do it all webinar long, because I have a horrible habit in that area. But I'm getting a couple of laughs in the room because they've seen me at my worst in doing it. But so what do these circles mean? I promise I won't take you through stats 101. And I'm actually one of those people who love these topics. But so if you think about two things that might be correlated, like, I don't know, people that live in areas with high air pollution, have higher rates of emphysema or whatever, so to what degree is one thing causing another? And the things that we're concerned with on the left is to what degree can customer experience for mobile deposit measured in a highly structured way, to what degree does that correlate with customer adoption? Again, I think most of us would agree, well, that's ROI. And we actually measured that in some highly defined ways. The benefit of a great data set. So I didn't just look at the percentage of the bank's users that were using mobile deposit, because we all know you can measure adoption a number of different ways. People that signed up, people are active users, what proportion of active users are started and then totally stopped, which means your marketing was good or the interest was good, but you had a horrible experience, all this stuff, and even 3-year growth. You cannot get quick statistics background. You can never get a higher correlation than 1.0. If two things are like 1.0 in correlation, that means they are perfectly correlated, which virtually never happens. I would have been surprised if somebody asked me to guess, how high do you think, Jim, these two things, experience and adoption, are correlated without looking at the numbers? I wouldn't have guessed more than 0.5. And which is why I reran the numbers multiple times to say, how could they really be 0.72, especially when we're not even counting for things like marketing or training of branch employees or CSRs. And we found a lot of variance around that sometimes frustrated us just being a user of these 20 bank systems. The point is, CX explains almost 3/4 or predicts almost 3/4 of actual adoption and therefore ROI. So they really couldn't be more correlated. If you're frustrated about adoption, if you're frustrated about ROI, don't look at the customers, look at your own CX. That's the lesson of this. So congratulations to the new mobile deposit CX leaders. And there is a lot of movement. First of all, where is there not movement? Capital One, they're winning 3 times. They're a 3-time winner. But Capital One, if folks are on the line, if you're feeling some warmth in the back of your neck, that's your competitors catching up to you. Literally, Wells Fargo have their distance to Capital One. They are getting so close. If the study is done next year, who knows who will be in first. But, and we'll show examples of most of these providers in a moment. So talked about Wells, they've got a lot to like in their app. US Bank, they're the bank that gamed the system. It's not cheating because we invited everybody to do this in our report and in last year's webinar. We've done it all along. They just met with us, not for a long time. They just said, well, take me inside the numbers. And we didn't commit to what would be in the next year's report a year ago, but we said this is what our thinking is, and here's how our ratings work. If you have that interest, reach out to Mitek, and they'll tell you how the process can work and get you connected. So congratulations to them. BBVA Compass, they have really great strengths all along. They blow everybody away in deposit limits. Again, I will talk more about that. SunTrust and Chase, along with US Bank, are also most improved, and again, a lot to like there. We'll talk about a specific change Chase made to really leap ahead in the rankings. So here's the probably the busiest slide in there, probably a relief, so you won't see a lot of these, but the color legend deliberately differentiate a little in the upper right so you can see the legend. The light green means best, dark green means second best, the orangish yellow, third best, and then if you're red, symbolically, you're in the trouble zone. So you can, our major 8 categories, 6 of which are UX, 2 of which are about policy, really. You can see that Capital One is really great in everything. Now, inside the ratings, they actually have a few areas they can improve, but they always placed in the top quartile, which is what these are, quartiles, of highly detailed ratings in everything they did. Again, but everybody here had something to improve in nearly every category. So if you decide to pour on the ratings, you can go to school on how to invest most wisely in improving CX and then ROI. But if you go down the ratings, then you start to see a little bit of drop. Wells in UX is neck and neck with Cap One. We'll show you screens in a moment. It's really deposit limits that are holding them back, and then US Bank is just moving ahead so fast in the others. It's when you start to get into the lower area that runs some trouble. But even if you look at those folks that, and this is an expanded field, I think last year we had 18, 17, something like that. So we keep adding more FIs. But BB&T and BMO Harris, even those FIs have some things that are emulatable. So you don't want to make the mistake of assuming, folks on CX teams or app designers or mobile deposit product managers, if you're listening, it would be a mistake to assume that, for example, everything Cap One does is best of breed, or there's nothing that BMO Harris does that's not best of breed. You can go further, and that's the kind of work that US Bank did in really gaming the system. Some highlights, if you want to look at overall categories, top 4 categories that for who was best of breed, again, overarching, you'll see that Chase and Cap One, they're recommending that customers keep the paper for only 2 days. Some of you might say, well, that seems like kind of a trivial thing. Why would you make that a major category? We didn't even weight our categories. This took on a lot of weight. This upper left-hand area is probably the easiest thing, not knowing everybody's risk teams that you have to work with, but that's probably the easiest single thing, the least potential amount of effort that to which you can get a big gain. And I think, if you think about what this message really says, if you're a bank customer and the bank is saying to you, hang on to that paper document for 90 days just in case, which is what HSBC does, or 30 days at BB&T or M&T. what kind of a message does that send if you're also telling people, hey, you can trust the app? You don't really need to rely on the paper anymore, not just for mobile deposit. It's this foundational capability, to everything in digital banking, right? If you can't get the money in quickly, you can't do all these other things. But to me, that sends a horrible undermining message. So we think it's not trivial at all. The only thing maybe relatively trivial about it is the amount of effort it would take to improve that compared to everything else. Possibly the number one biggest opportunity is in deposit limits. One aspect of that is personalized deposit limits, which is just an aspect of everything we looked at. But this is the new bar. 9 out of 20 banks are now personalizing deposit limits for customers. More about that in a minute. Lower left, auto capture, definitely the standard now. And Chase moved way ahead in the rankings, along with other areas. But by adding that, and we treat that as its own category because it so simplifies the experience. When you hover over, and the picture is just taken for you. And I remember my bank that I've been with for many years, before they offered it, I would sometimes deal with 5 attempts, to get that image of the check, and then think I had it, and then realize I didn't. So, and then the lower right, this real-time deposit status updates, which is definitely a UX area. 17 out of 20 are flawless here, which is really a big deal. If we could see that kind of excellence in areas like help and self-help and so forth, troubleshooting, we would really start to have a great UX experience everywhere. Looking at, so I covered this one, I'll just skip right through it. 2 recommended paper retention days. We think this is the standard. And if this creates a raging argument internally, that's probably a healthy indicator of a culture shift that needs to occur internally in order to achieve the desired customer behavior change externally. Customer deposit limits. BBVA is, and I had the pleasure of spending a couple hours with Alex Correa at the BBVA a couple years ago at a banking event, American Banker or something, and getting to hear about how they did this. It's really something to be impressed with. And what jumps out at me is this. So I get to do strategy work with a number of the banks, including a few of those in here. And I remember meeting separately with another bank, and them having deposit limits that are among the lowest in our study, and then talking with their fraud risk manager because they felt like they had limits around the $500 to $1,000 range, depending on how you categorized it, and they were just losing their shirt on fraud losses. What they lacked was the sophistication of this internally built decision management process that BBVA described as like a chutes and ladders game. One factor the customer has moves you up, another one moves them down, and they eventually score it. And they tie this in with personalized limits. And it's really important for me to mention, Mike Diamond asked me to point this out just so we don't create confusion, that this is a potential amount, but we have ways of measuring both, keeping kind of both in mind. So if you're a BBVA Compass customer, you can get to $45,000. And it's not based on marketing and sales factors like how much you have on deposit or how many product relationships, but true risk factors. And the last thing I said is just, I'm going to mention it again later on, so I won't mention it twice here, but it's a big deal. Risk should drive limits, not sales and marketing. Because if sales and marketing is determining your risk limits, really what you're doing is no different than charging a fee. It's the equivalent of that. But that's the gold standard, 45K, and who knows, next year it might go up. Other people are still keeping this as limited as $500 or $1,000 and unpersonalized. My bank that I've been with for decades, just like literally a couple weeks ago, moved me out of the $5,000 range. And as a small business owner that mostly has banking clients, literally that means I'm going to an ATM or a branch every single time I need to deposit a check, which actually had me having a conversation with my accountant about whether or not I should leave my bank of 30 years. Thankfully, they raised the limits. That's a true story. That check deposit limit. So I covered this. Again, I'll just pause for a second on it because it's a huge deal. You know, it's the analogy I would give to this is if you're improving everything about the UX and even the CX, but deposit limits, you know, you're making for a smooth experience and you have all these great features and you've streamlined it. I mean, how is that different than having maybe building the world's most enjoyable freeway? You know, it's smooth sailing, it's great road signage, easy to merge on and off, and yet all the cars are backed up trying to get onto it. Nobody can get on. I mean, that's essentially what you've done is keep customers from using it. And if your fraud people say, well, that's because we're losing our shirts on losses, I hope that you'll deliver the message to them that it's because of something they're doing wrong. It really is, because the banks with the highest fees also have the lowest losses based on what they're telling us privately. Community banks and credit unions. I hope you know that we are definitely mindful of you, even if we couldn't put you as a distinct provider in this study. We hear a lot of you express your frustration that your digital banking vendor or your core processing vendor hasn't prioritized things like autocapture or other UX capabilities. So a couple of things. One, as mentioned before, focus first, don't forget to focus on things you can control, deposit limits. Maybe that means you need to get to your risk partners. We realize small FIs, you're so reliant on others. Having said that, I get this unique opportunity along with others to see the industry from an ecosystem point of view. And what I find, especially having worked from a core processing vendor when I started my fintech career, sometimes banks and credit unions are their own worst enemy because they focus so much on how they think they're really unique, and they might overplay that in their own minds, field of membership or footprint or whatever. And so to the core processing vendor or the digital banking vendor, folks like Mitek, what it sounds like is a cacophony rather than a symphony of requests. So everybody's saying they need all these 200 different features, and no one feature rationally rises to the top of the product manager's product priority list. So my recommendation would be smaller FIs, talk with one another, see if you can agree to get auto capture and other key features emphasized in this study prioritized so that you have more symphony, less cacophony, and with the vendors whose behavior you need to change. Key UX areas requiring attention, I mentioned earlier, health, documentation, and tips. It's clearly lagging in our study. Multi-channel training and support, it's a big deal. Sometimes, frankly, some of you, it's a bit frustrating to just try to figure out how to use things and where everything is and how to get onboarded in the first place. Created a lot of challenges. This is a slide that I asked Mitek if they thought it wouldn't be a bad idea for me just to plug it in. It comes from some of my strategy work with FIs and presentations to executives and boards. I believe, so I'm going to get ready to eye roll if some of you aren't true believers in being digital first, but I believe every community bank and credit union should appoint at any hour you're opening for every branch. There should be somebody who's working the place who is the fallback digital genius, and that might be Millie, it might be Fred, it might be somebody who says, and then here's what pops out in their mind. Well, I don't even use this stuff. I know I'm supposed to, but I didn't. And here are my reasons for not believing in it, or being able to figure it out, or I have an AOL connection or whatever. But you flush that stuff out, and the best teachers become the best users and vice versa. So just appoint somebody and go through the process. And mobile deposit being foundational capability to digital banking is a great place to start. So with that, CX areas most needing an upgrade or deposit limits. Absolutely a key one. Recommended paper retention days. It's important, but you get so much value from it. Help documentation and tips is a crucial lagging UX area. Multi-channel training and support. We didn't measure it in our ratings because we didn't feel we could do it justice, but we're happy if questions come up, and I hope you're queuing your questions up or your comments so we can take them here in just a moment. Happy to talk about in general what we saw. Frankly, we think this is an area in which you don't want to be building in a kind of a built-in frustration level to get people off the phone, because what people are trying to do is get the help they need to get off the phone down the stretch. So smaller FIs, press vendors on auto capture and key other areas. As we're winding towards questions and comments, worth recognition, B of A did a really unique thing on they only have monthly limits, no daily limits. So it's really simple to understand, and they can also improve the app language. Huntington is just a strong UX overall for this. I think it was the first time provider in our rankings. And I took a little bit too much time getting here, so I'm going to erase through a few of these. But actually, I'm better on time than I realized. So Cap One highlights, and I wish I could cover this for everybody, because again, every one of the 20 banks have something that is worth recognition. So everybody did something well, but at the risk of sounding like the former kid soccer coach, not everybody gets a trophy though. So Cap One has been a leader for 3 years, but they're narrowing the range. The design, if you haven't used it, I would urge you to download it. It's just simplistic. It's just a breeze. And, sure, they have a benefit of, you'll see it on the next Wells Fargo screen. It's a little harder for someone like a Wells Fargo or Citibank or B of A with legacy systems. But Cap One really takes advantage of not just them being having less legacy to deal with. They figure out how to say so much more in less, and then they have some nice built-in shortcuts or some design uniqueness that you'll see right away if you jump into it. So Wells Fargo, they've gained so much ground over the last 3 years of doing the study. Now, it's not as simple as Cap One. You can see a little bit of it in some of the legacy systems language that I know drives any big bank crazy internally. But they're making so many great strides in incorporating images and things like that. U.S. Bank, they're the one that more than anybody else has gamed the system and moved ahead by just understanding how we do our ratings. Again, they will evolve, but I like their use of simple, like iconic images and just the simple boxes and symbols and so forth. We didn't see so much of that in really anybody else in the way U.S. Bank did it. Already talked about BBVA Compass in the limits, so in wanting to give everybody some deserved attention. SunTrust Fifth Place has also improved quite a bit particularly this last year, but over 3 years. Their flow has really improved a lot, and you can see how they don't give everything the same level of attention and font, but they've done so tastefully in the way their app uses. Just really a great improvement. And they're really punching above their weight. And I guess that's we just had 5 in there. So with that, want to leave ample time for questions and comments. So I raced ahead a little bit at the end, and we're seeing improvements overall. So great job, everybody. The bar really is not just it's not just a metaphor to say it's being raised here. It truly is. So Mike, with that, I want to say thank you one more time for letting me do this independent research along with Conrad CIT, and I really appreciate it when those few cases where someone says, researcher, just go do your work. We're not going to get them, and we're not afraid of what you find out. We're just going to empower you to do it. So thank you for doing that. And with that, I will turn things over to you.
Well, thanks so much, Jim, and great job. It's fascinating stuff. Do we have another slide after this one? Yeah, thanks. This is a quick commercial, and then we'll flip back maybe to that other slide. I did a blog post after I was at Money 2020, and somebody from Bright Talk noticed it and asked me to do a webinar on that, so I'll do that next week. So if you find your way to Bright Talk, and I've got the date there, but Bright Talk's one of those deals where I'll do the webinar, but it'll be recorded, and you can listen to it later if you'd like. You can go back to the other slide. I just want people to be aware of that. So thanks a lot, Jim. It was I think this is such a great body of research that you and the team have put together. It gives us such an insight into what's going on in this very, very important marketplace. And one of the things I want to challenge people on this call on, in addition to know your number, I hope you wrote that down somewhere. If you don't know that number, you got to go find it. But I want to challenge you on something, which is that I really, and this is personal opinion, but I've been in this world for quite a while. I believe that a financial institution's mobile deposit adoption is a leading indicator for their digital readiness for a future that's racing towards us very, very quickly. That is, you are unlikely. There are right now lots of people in financial institutions who are working on the latest and greatest thing. But if you are hoping for people to get an auto loan with your AI-infused chatbot that you are thinking about for the future, and are unable to get a third of your checks through an app on your phone that saves everybody a tremendous amount of time, then you probably have some work to do. So mobile deposit penetration is a great way to know. Now, with that, Jim, why don't we take a run at a couple of questions?
That sounds good, Mike. One of the first questions we saw, or I'm seeing here, is actually one that we've gotten past years. Actually, if you could flip over to that other one so I can see the wording. Do you have studies on the financial advisory business, since this one is about retail depository banking or credit union, shared draft accounts, my friends in the credit union realm? So we did not do that, but I'm going to take on a couple aspects to that question, though. So we did have in the study, and I forgot to call it out, so thank you to the individual that asked this question. We did include Ally Financial, which I know is not financial advisory, so I get that, we're moving in that direction, though, the investment sector, and they're kind of a unique animal in that. Ally Financial, we wanted to include them because we thought we could learn some unique things. They're on page 36 of the full study, and we wanted to see if there was some, because Ally is such a unique player building deposits for their lending business, but high interest rate CDs and so forth. And what we found there was they have check deposit limits that are $250,000 daily or monthly. So I was so glad that we did that. And we are always considering, and it's really a Mitek decision, whether or not it makes sense to, they're considering whether or not it makes sense to do this same study for other adjacent verticals, if you will. So, as was asked, financial advisory, we could look at Schwab or others, and then also some other businesses that, beyond that, like credit card, for example. But we deliberately did not do them in this scorecard because we knew we'd run up to other things. And I don't know, Mike, if you wanted to comment on that as well.
No, I think that's great, Jim.
Okay. One of the other questions are any of these FIs, so the 20 we looked at, plus really Ally in the study 21, allowing or offering a mobile app that allows non-check items to be captured and associated to the checks they are capturing? Mike Diamond, that's probably a question for you, because I think that's really we did not measure that, and that really gets into a potential set of features that I don't know, you might have a point of view on.
Yeah, can you actually rephrase that or say that again, Jim? I just want to make sure I understand that.
Sure. Sorry. Are any of these FIs allowing or offering? I realize that's a research question. So, but an app that allows non-check items to be captured and associated to the checks they are capturing. Now, we didn't measure that. I'm just wondering if that's.
Sure. Yeah. I think there's I think like if I'm understanding the question properly, I mean, like for instance, associating we have a concept called an associated documents module, where you can associate a document or a picture or anything with a particular check deposit for a small business. They may want to have a picture of a document, an invoice, bill of lading, something like that associated with a check payment. You might see things in the realm related to accidents and reports and things of that nature. There hasn't been a lot of that out in the marketplace. But I think there's a lot of ripe opportunities for banks to go out and do something different, which is something that banks are often and credit unions are often looking for an opportunity to establish some differentiators, and this is potentially one of them.
Another question that we had that I meant to mention a moment ago in the earlier question about parallel verticals, if you will. So thank you to the individual that asked this question. You're definitely keeping me, you're making up for my memory lapses here, which is, the question was, have you done a similar study with commercial clients? And in particular, what an area that was interesting for us was SMBs, because SMBs are kind of, somewhat like consumers, somewhat like larger commercials. And we haven't. We've thought about it, and I think about it a lot, being a small business owner myself and having frustrations with check deposit. So there is a study in the works right now. I'm understanding that it's going to come out in just 2 weeks, that sitting here at Comrade and CI&T, who is my data collection partner, they are directly doing. So you will see that come out. It's it's a Mitek, it's a study made possible by Mitek that you'll see in 2 weeks. It's a white paper, so not a benchmark study, but it will cover the commercial space. Something we've been wanting to do for a couple of years. So I'm glad that you had the chance to get to that. So on the, and please keep the questions coming. Those are great. So we've got some more. So one of the questions goes back to the very initial slide that we had about adoption numbers. And, where Mike Diamond, you presented some data, and the question, I'll answer this, and feel free to add anything onto it, Mike, if you want, but I've probably got it covered. And where, the question is, our adoption numbers look totally different than yours, and why is that? So I get, if you think about adoption numbers internally, if you're a bank or a credit union and you're in our top 20, it's almost impossible for your internally obtained and curated numbers to look the same as numbers that somebody got through outside research methods, because you're pulling numbers likely off your server for transaction counts. They're off your own server, or maybe you're going to a partner like Mitek and getting them off the volumes they see on your behalf. But if you look at an outside provider, the numbers, they may come from a survey, or they may come from investment reporting like 10K or something like that. So it's not a matter of being right or wrong. It's just a matter of like units of measure, like quarts and liters or something like that. The key thing, though, coming back to what Mike Diamond said, is, a measure of most great organizations, is they achieve maximum outcomes when they have a structured way letting everybody know in real time what the current outcome measure is. That's what sets all top performers aside, from the others. So your numbers may look different, but if it's an externally obtained derived number versus an internally derived number. Another question.
Yeah, I'd like to.
Yeah,
let me, if you don't mind me jumping in on that real quick, Jim. One other thing I want to mention is that we're at Mitek, we're going to be rolling out a service shortly where we will provide subscribing institutions, and here I'm going to use that word again, benchmark information relative to their performance across a range of mobile deposit transaction dimensions relative to a representative peer group, anonymized, of course. So you can reach out to us, and we can give you more details on that. I don't think we have my email on here, but email address is mdiamond@miteksystems.com, and then we can help you get squared away with that, because I'm sure that's going to be for all financial institutions. Go ahead, Jim.
Great, thanks, Mike.
Yeah.
The request is, tell me more about the role that CSRs, customer service reps, and branch employees play in adoption. Here's what, and I think if you're a credit union or a community or smaller regional bank in particular, I hope you're tuned into this, because there's a generally strong correlation we saw that the smaller the provider is, the more challenging it is to get all the channels behind a digital goal. Whether that's some passive aggression like Some people that are, in the human-powered interaction channels are worried they're going to help themselves lose their job. They take sort of a short-term basis, which really says that, the people running the organization haven't helped people in the financial institution understand how digital is, maybe a crucial overriding goal, but that doesn't mean that everything that's digital just goes away forever. I think that's just simply not true. And there's so many examples of that in the real world. But what we found things as we again, we only get data from real customer usage. In our first year study, starting out, we relied maybe a little bit on some web data, and that can be problematic. But we found it to be so frustrating, especially getting just different information about what a deposit limit is. We'd get one answer in the app, and then we'd get another answer, talking to a CSR, trying to understand what we were seeing. And then you get this vague information that makes it seem like people in the branch, again, they give themselves away, that they haven't used it, they don't believe in it. If they did use mobile deposit, they only used it because they had to as an employee. You can start to pick that up pretty quickly when we're doing essentially mystery shopping. It's always mystery shopping. We never announce that we're a researcher, and we take great pains to not let that be known. So it's the buy-in, the usage, the sense of ownership, and just seen from research in all different kinds of apps. That'll come through in spades. Another question area is, I'm just going to read this verbatim because I'm just reading it as I'm seeing it. So I won't find myself in the humorous outtakes. A paper outlining mobile deposit vendor capabilities could be interesting for smaller FIs who partner with a third party instead of developing themselves. That's really interesting. So somebody was tapping into the many comments I've made from having, I really enjoy working with smaller FIs, do it at boards and executive meetings, things like that, or vendor meetings, and I understand their frustration, especially having worked for a vendor that I didn't feel was very tuned into the credit union clients they served. So I didn't stay there a long time, a couple decades ago. But I don't, has that been considered? Mike Diamond, I don't know if you wish to comment on the potential for doing that.
Go ahead, Jim, and I might add, but go ahead.
Yeah, and it's the following names are from me. They're not from Mitek or anybody else. So what I hear is you just fill in the blank on the name, and here are my thoughts on it. That because I have included the credit union or community bank point of view in various reports that I've either solely done or was responsible for, especially at Javelin when I was there. We would do a few here and there. I think capturing that point of view, and especially in how to navigate the vendor relationship and how to convince your vendor that adding certain features really is a better payoff for everybody. And that's a win-win all around. That could be an interesting set of best practices. That would probably be more of a qualitative project because no one could really do a positive business case for including 1,000 community banks and credit unions in a study. But I could see where something like that, more of a white paper in nature, could be interesting in helping credit unions and community banks build adoption.
I had seen, but this was a number of years ago, but I had seen an analyst report, where an industry analyst had done some report on the kind of the strengths and weaknesses of the different providers, but I haven't seen. So nothing comes to mind recently. Yeah.
It's just hard to get your feature. If you're a smaller financial institution, it's almost like trying to figure out. I do a lot of volunteer work at city council meetings and a lot of local government, just because I'm a patriotic individual, and it's just trying to figure out how do you get your item moved up on the roadmap is kind of a whole separate discussion item itself. But one thing that could be helpful, bringing it back to the study that this webinar is on, is real data that shows that things like, and again, you're hearing me say this as just myself, Jim Van Dyke, an individual researcher, autocapture, which in and of itself has significant value, statistically significant value. So I don't mean that in a generalized sense of the word, in moving adoption. You know, it has standalone value. So taking that somehow and then getting your product manager to move that up on the MRDs or marketing requirements is really kind of part art and part science. So thank you for that question. There's one question remaining, unless somebody else types one in before we wrap things up, and that is, could you clarify how a bank has implemented personalized limits and got credit? So in the scorecard for a specific credit limit, I can understand how that might be confusing, and I touched on it just quickly before. So if you take the example of BBVA Compass, we gave them credit for $45,000 because we saw convincing examples that does exist. And in the same sense, my bank that I've been with for 30 years, I get frustrated sometimes that their deposit limits with me are low. Yet another person I went through, they're a large bank, showed me that his limits with them were much larger. So we have ways of figuring out what the true maximum is, and also if they published it, then we're pretty sure it's real. But here's what we're looking at on this. We're looking at the ability of the bank to have this highest level limit, in practical theory, meaning it really does exist for some subset of the customers and not for sales and marketing driven reasons. So it's truly risk driven, and yet what their standard limits are. And then it's pretty straightforward in our process to get that defined on a daily or monthly basis because most people spell it out. So having said that, then we go through this whole process of call centers, the ways we pose questions as concerned customers, and frankly, our hit rate, our frustration rate is high, but our success rate is pretty good. Hope that answers that question. So I think we've covered the questions. Yeah. Mike, I'll turn it over.
Thank you. Thank you, Jim. Sorry. Yeah, thank you very much. And I want to just maybe slide one other concept into this before we depart, and that is, and I may cover this in that other webinar next week. Somebody had asked about the CSRs and the role of the CSR and so forth. Many of us remember when the airlines began to offer kiosks in the airport for checking in, and the airlines did something pretty smart, which is they had people hovering around there. You don't see that anymore because everybody knows how to use them. But in the early days, they had airline employees hovering around there helping people, use the machines and all the rest of it. That process of being an ombudsman, being a guide to people as they're using new digital technologies, that's vital. And one of I spoke to somebody at a financial institution who told me, one of the problems we have is we know that mobile deposit isn't taking jobs away from people because the attrition numbers are such that we don't rehire them as fast. So nobody's losing their job because of mobile deposit. But the people in our branches aren't so sure of that, and they don't know that. And so we have to do a better job of working with the people who know that how this works and to get them incented. And so the really smart banks, and there are some out there, have really done a great job of making their branch network partners in driving the numbers up. And some of that has to do with a little bit of carrot on compensation, and some of it has to do with a little bit of stick in terms of what the expectations are for the financial institutions. But make sure that you are thinking through what happens in a branch, because the people who are not using mobile deposit are often use it, and we've done some other studies on this. I'll point that out to you later if you want to reach out to me. But people who are not using it will use it with just the slightest bit of encouragement. All they need is somebody to stand next to them and say, let me show you how this works. And when they see it, they have confidence, and that's what they start doing. And that's the kind of behavior you want. And so I encourage all of you to be enthusiastic and positive in how you're rolling this out within your financial institution, within your organization. Like I said at the beginning, we're really passionate about learning at Mitek. We like to ask a lot of questions. We like to share information around. We all get better together. I've just had a blast working on this with Jim and Conrad and the team. They do really solid work. Everything is working exactly the way it's supposed to, the way Jim described it. We write the check and then step aside. They do the work. We're as surprised by the results as any of you are when you see it. And it's really good stuff that they do. And we need more of this in the industry. And I'd like to thank him and the team for all the work they've done to make this a top-notch report that I intend to continue on with. So with that, thank you for joining our webinar, and I wish everybody a great and profitable day.
Great. Thank you, Mike. This is Jim Van Dyke, and I just, again, agree with the comment about the importance of people, real people, that there will always be a place for people to make the transition to digital possible for the customers, and they really just elevate their own importance and secure their own future. Just like Apple didn't make retail go away, they just changed the face of it, and that's what can happen in branches and the digital geniuses. We will send out the deck to everybody that's on this webinar, so you will receive an emailed version of the deck. The recorded version of the webinar will be on mitechsystems.com. They always do a nice job. I always look on there, and I was always impressed with the way they make it really easy to navigate their way through. So nice job and design on that. So with that, thanks for everyone's attention, and have a great day. Thank you again, Mike and Mitek Systems.